Hello all, welcome back to my YouTube channel. In today's video, I'll talk about how to do a company code or a balancing segment transfer within fixed assets. So I'll take a requirement wherein I want to transfer an asset from one company code to another company code within a particular ledger. So I logged into fixed asset super user Reliance INR. So within Reliance INR, I have two company codes 01 and 02. Now I will pick up an asset and I'll transfer the asset from company code 01 to company code 02, and then I'll show you the accounting impact of transfer from one company code to the another company code. So first navigate to asset workbench, asset workbench, pick up your asset book. Reliance Corp is my asset book, and there are a lot of assets within this asset book. So let me just pick up maybe say this asset. This is my asset number, and if you go to financial inquiry, this asset, the cost of the asset is 65,000, and this is the net book value, and this is the YTD depreciation, and the depreciation per period is 5,460 rupees. Now if you go to the asset assignments, you'll be able to see that it is actually now currently coded to company 01. I will transfer it from company 01 to company 02. So what you need to do is units change. So there is one unit, so I'm transferring it from company code 01 to company code 02. So just put -1 here and then +1. I mean, the reason why I'm putting -1 or +1 is I'm actually transferring one unit of this. So there are say 10 units, and if you want to transfer the entire 10 units, here you need to specify -10 and then +10. And then maybe do a shift F5 to copy the entire account code combination and just change the company code. So I'm transferring it from Reliance Communications to Reliance Textiles. Let me just copy the same location, click on done. If you requery, you should be able to see that it's now under company code 02. Okay, so we have now moved the company, we have moved the asset from company code 01 to company code 02. Now let's run the depreciation and then run the create accounting and then check the accounting impact. So generally, before you run your create accounting, you should ensure that you should run the depreciation, close the period, and then run the create accounting. So that's the general process. Run the depreciation for my asset book. So let me close the period. So once the depreciation request is completed, I'll run the create accounting, and within the create accounting output, you should be able to see the concerned accounting entries. That's one way. Otherwise, once the create accounting is completed, it will trigger the journal import program and the entries are transferred to GL. You can even query the journal from the GL. The third way is you can go to the inquiry and then go to the transaction history, query for that particular asset, and then click on view accounting to see the concerned accounting entry. I mean, it's not mandatory to run the depreciation in order for you to run the create accounting, but that's the general process. You actually perform all the required activities in a given period, run the depreciation, and generally you run the create accounting at the end. So that's the reason when I'm running the depreciation now with the close period checkbox as yes, and then after this I'll run the create accounting. This depreciation run request will internally trigger a couple of requests, so we need to wait for all the concerned requests to be completed, and then you should run the create accounting program, which will generate the concerned accounting entries. So this is the last program, so let's wait for this particular program to be completed, then we can run the create accounting. Generally this program takes a while, that the depreciation process takes a while because it needs to trigger a couple of requests, and it also depends on the number of assets in your asset book. Okay, as the depreciation program is completed, now we need to run the create accounting. Select your corporate book, and end date will be the last day of the month, which is 31st of October. Accounting mode, I am going for final. Report, I'll just say detailed report because I want to see the accounting entries. Transfer to GLS, yes. So posting, it may or may not be posted, that's fine. So this create accounting assets will internally trigger accounting program, and then for the concerned journal entry, it is going to trigger the journal import. As we have said, the transfer to journal ledger as yes, it will trigger the journal import, and it will push the data to the journal ledger. And as we have said, the posting as no, it will be created as a journal in GL, but the journal entry will not be posted, as we have set the posting flag as no when you are running your create accounting. Let's wait for this program to be completed, then you should be able to see the impact of the accounting entries. Let me just copy the asset number. This is our asset number, where we move the asset from one company code to another company code. As we have moved the assets from company code 01 to 02, system will transfer the cost accumulated depreciation from company code 01 to 02. So you should be able to see the required concerned accounting entries. And as 01 and 02 are two different company codes, system will also create the intercompany receivable and intercompany payable lines. So you would have already set the concerned intercompany accounting rules within your general ledger setup. So based on the system will pick up the intercompany receivable and intercompany payable accounts, and it will create the intercompany lines. Okay, your create accounting program is completed. So now let this particular program run, but you can now go to the create accounting assets, click on view output, and then you should be able to see the concerned accounting entries. There should be accounting entries under the category transfers. Okay, so under transfers, looks like it's a big file. Okay, let me query for that. Transfer. Okay, so here you can see the accounting entries related to this particular asset. So here you cannot see the description of the account. So let's go to the view accounting, and then there I can explain you the accounting impact. Go to the inquiry, transaction history. This is my corporate book, asset number, find, put your cursor here. This is where you made a transfer. So click on tools. So if you want to know the details, click on details. So here you can see it has moved from 01 to 02. So click on tools, view accounting, which is where you should be able to see the concerned accounting entries. Okay, so the first entry is movement of the cost or transfer of the cost from 01 to 02. Asset cost generally shows your debit balance. So there was a debit balance under 01 company code with 1560 is your asset cost account. So here you can see the description is, I think, computers and software. So there was 65,000 rupees. So that was actually credited, and that was debited to 02 company code. That's with regard to the asset cost account. Now with regard to accumulated depreciation, generally accumulated depreciation shows a credit balance. So there was a credit balance lying under accumulated depreciation under 01 company code. So now we have debited that. 32,500 was the accumulated balance. It was debited under 01, and it was actually credited to 02. So we have moved the accumulated balance from 01 to 02. And once you do a balancing figure, so there's a balancing figure of 32,499. So that is like if you add up these two debits and credits, the there should be a balancing figure of 32,499.98 with I mean, sorry, it's not exactly balancing figure, but you should also create hang on, should be, sorry, it's actually a balancing figure because like under 01 company code, so here you can say 65,000 credit, 32,500 is the debit. For the same 01 company code, 32,499.98 is the balancing figure under 01 company code. Similarly, under 02 company code, 65,000 is the debit and 32,500 is the credit. So balancing figure is 32,499.98. And here you can see 02 company code is credited and 01 company code is debited with the intercompany segment. So in my example, or in my current chart of account statement, intercompany segment is the last segment. So here you can see intercompany with the 02 line, you have an intercompany segment of 01. And for 01 line, you have an intercompany segment of 02. And this 2370 is your intercompany payables account, and 1810 is my intercompany receivable account. So here you have actually transferred the asset to 02, and hence you have an intercompany payable under 02 and intercompany intercompany receivables under 01 company code. So this is the accounting impact. If you want, you can double check the cost of this particular asset. Go to the asset workbench, financial inquiry. So this was the cost of the asset. This is the accounting entry which you can see. And accumulated depreciation was 32,500. Here you can see 37,916 because it includes the depreciation for the current period. So, but the accounting entry, this 32,500 was generated before the depreciation for the current period. And now the depreciation from the current period will flow to 02 company code. In earlier periods, it was 01 company code. So the depreciation which was already charged for the earlier periods, there will not be any a reclassification entry for the depreciation which is already charged because you are already passing a accounting entry for transferring of the accumulated depreciation from 01 company code to 02 company code. So this is how system generates the accounting entries whenever there is a transfer of an asset from one company code to another company code in a particular ledger. Thank you. Thanks for watching my video. For interesting video on Oracle Financials, please do subscribe to my channel. Thank you.